Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho and I'm the Senior Analyst at FI Trade. So let's go ahead and analyze these markets. First of all, I just want to talk about two companies and only two companies in this video. Alright, so Amazon. So yeah, Amazon stock has been really pulling back lately. I had a downgrade at $200. We touched that $200 area once and we kind of bounced off of it. And that's basically the $200 area along with the 200-day moving average tied to that $200 area. So we touched the 200-day moving average once, we broke right below it, and we closed below it for 5 consecutive sessions. That's basically a confirmation to the downside, and there are no more moving averages to support this market anymore. As you can see, the 20, the 50, and the 200-day moving averages have been closed right below. I did initially downgrade this at 200. It has gone all the way down to 180. The stock has already depreciated by 10%, so approximately investors have already lost a couple $billion in this stock. I'm pretty sure analysts at major firms who hold a humongous block of stock in this company are going to continue to liquidate it at billions of dollars in losses. We're going to see the stock most likely head lower down into the $80 to $120 area based on a lot of what analysts estimate. I wouldn't be surprised to see it go all the way down to 100. Some people have even more conservative estimates sitting at around $80 to $60 as well. So again, the total nominal value of what's going to be lost here in this trade is somewhere around $40 to $50 billion. So again, don't be surprised if this stock continues to head lower. I'm definitely a bear on this company. What really concerns me about Amazon is its earnings. I don't like the fact that its margins are continuing to shrink even as their revenues slightly improve. Even if your revenues improve, your margins have to improve as well. You see that stocks, for companies who trade at 50 to 60 price to earning multiples, there has to be a much more justifiable reason. I see companies like Starbucks and Apple trade at a much lower price to earnings multiple while still having great margins and also continuing to have great revenue growth as well. So this company clearly misses the criteria of what a great company is, and along with it is trading at a really high record valuation for what it is not. So again, this is just objective analysis of what I'm looking at as far as Amazon is concerned. I don't see how it was able to trade at a $100 billion market capitalization without it being able to grow at a rate fast enough to outcompete Walmart store sales. I mean, Walmart trades at a $200 billion market valuation, and Amazon's revenues aren't even close to what Walmart has. And let's not mention, Amazon has much smaller profit margins as well. Their international growth has been abysmal. They haven't done as well of a job as managing costs. Their exposure to international markets has obviously failed, and unless if they continue to invest heavily into it and eventually succeed, again, it would be really hard for me to consider investing into Amazon at all. This downgrade is going to be held, and I'm probably not going to be the first or the last person that's going to be continuing to put a sell rating on this company. I do anticipate there to be a small bounce hit again from a technical double bottom standpoint. We could touch that 200-day moving average as resistance before heading lower again. So let's just emphasize that real quick. A quick bounce into the $200 area before we head lower and continue to go straight to the downside as many Wall Street firms continue to sell this company into the abyss. There's just too much money to be lost here. I wouldn't be surprised if major block investors lose billions of dollars on this trade. I mean, not just billions, but tens of billions of dollars. Moving on, we're going to talk about Abercrombie and Fitch. This stock has just been hammered. We are sitting at around $75 per share value originally back in around October. It's already down to $44.72. Okay, so obviously somebody knows something that they're not supposed to. Either that or their expectations have really sunk on this company. Now let's go ahead and analyze where we can honestly anticipate some support. We're going to look at the 38.2% Fibonacci retracement area, which is at around $41.73 exactly. So this area is most likely going to be a key area of support for a quick bounce on the stock. I kind of, just decided to kind of work there for a little bit just to see what this company was all about. And I kind of like the fact that it's kind of hipsterish, you know, like you kind of like what you see there. The clothing's really nice, the customer service is great. It's really different from what you see from a lot of different clothing retailers. Their marketing strategy is relatively different as well. For example, rather than trying to rely on just a visual approach to marketing, they also rely on sound. They rely on sound, smell. They try to appeal to all senses along with hearing as well. One thing that kind of gets me concerned is the red tape. Okay, so a lot of the time when I see companies that continue to grow, I want to see a company that grows based on its ability to manage its employees properly and its ability to consistently deliver results on a bottom-based level as well. So not just being able to create results that are appealing in certain areas of the company, but in all areas of the company. There are very few companies that successfully do this, and a company is only as good as its bottom-level employees overall. So if there are some areas that I wanted to really address, it would probably be the training of the employees. It's not just about what you say, it's also how you say it. But then again, they do much better than just about every clothing retailer. They have a much better marketing strategy than just about every other clothing retailer. The fact that everybody talks about them, talks trash about them, it basically means they won because, again, they've already gotten inside of your head. Once all a marketer is really trying to do is get inside of your head. Once they've accomplished that and created some sort of perception of their brand or product, they've already won half the battle. The rest of it is just trying to convince a person to press the buy button. And very few companies are as good as Abercrombie at doing it, especially in the fashion retail sector of the market. That's why people bid the stock up to a 40 price to earnings ratio. Right now it's coming back down to a more reasonable ratio of around 20 price to earnings. Now 20 price to earnings is pretty decent. It does kind of make me interested as a longer term investor to want to buy into it, just because I understand what the company actually wants to do and basically their whole entire marketing strategy. I honestly don't think the company sells the most attractive clothing on planet Earth. I don't think anybody would say that or agree with me on that factor because, quite frankly, even I don't think their clothing is the best looking clothing on Earth. But what I will say is that when they sell a product, they're not trying to sell you high, I guess, really amazing looking clothing, but what they're really trying to sell you on is an image of what you can honestly become. And again, that's a really long discussion on marketing. But their marketing strategy is by far the best in clothing retail. It trumps any other clothing retailer out there. And, I don't really see that many door greeters at many other retailers. So, again, they kind of established some of the main key principles, which is to appeal to all senses. Smelling, you kind of smell the store. Hearing, you hear music that's ridiculously loud. Visual, you have visual cues. You got pictures. You got people that are, I guess, seemingly good looking that work there. And they have really, really great profit margins as they have a vertical structure to how they run their business. Manufacturing is in-house. They create their own products. They do their own branding. They have their own retail fronts. It's basically Apple all over again, or Chipotle Mexican Grill. Very verticalized. It's kind of like Starbucks as well in a sense. These types of businesses are kind of the businesses that are pushing forward in the 21st century, and it's the type of business you really want to invest into if you're looking for really strong growth. But at the same time, there are risks associated with it. If the message is not delivered correctly to lower level employees where everybody is empowered to do the same exact thing as just about everyone else in the organization, you're going to have some longer term troubles ahead. And again, there are very few Fortune 500 companies that can maintain sustainable results over a long period of time with sustainable growth. Even Apple is having trouble right now, but at least Apple is trading at a $400 billion market capitalization. Abercrombie is sitting at a $5 billion market capitalization. Obviously, the scale of those two different companies are extremely different. But in the same note, there is much more potential in these more verticalized business structures than there are in a very centralized, decentralized business structure like, I guess, Walmart or Target or something. So, again, that does it for me for today. I don't really have much of a recommendation on Abercrombie. I do like their company's business strategy overall. However, in light of what's going on, there's a lot of institutions selling the stock. I just couldn't really find any reason to just speculate and just jump in and start buying the company's shares right now. But the 38.2% retracement and the 23.6% retracement area seems pretty good at around $41.73 and $31.36. anywhere between that range seems to be pretty decent, and I'm just going to highlight it on the chart for you guys. Great marketing strategy. I really wonder if this company could kind of be more or less like an Apple in technology, or Apple kind of revolutionized technology. You can still revolutionize clothing and the industry itself. They've already done it. They just haven't mastered the buy button completely yet. But it's gonna take some time, I mean, this company has some great potential later on in the future. We're just gonna have to watch and see how well they execute their strategy, and if they continue to execute it in a way that's consistent and consistently meets standards on all levels of the corporation, you've got a winner here. So again, that does it for me for today. If you guys have any questions about the two companies I mentioned, which Amazon is a severe downgrade, by the way, and a severe downgrade to the short side. And Abercrombie, I want to buy the company, but I can't, not as of the moment, because of what I'm seeing on an institutionalized basis. So again, institutions are really, really hard pressing to sell the stock like crazy right now. I don't really know why, but once I identify the reason, I'll go ahead and, I guess, explain it. But until, I figure it out, I mean, it just doesn't seem very justified for why they're selling the stock. I don't see any clothing retailer doing a much better job. So, again, that does it for me for today. Hold rating on Abercrombie. If you already own the stock, I wouldn't just sell it right now. If you're looking to buy the stock, I would wait between this $44, $31 area, between those two areas. So that does it for me for today. Take care, folks. If you guys got any questions, feel free to go ahead and leave a comment below, as I'd be more than happy to start answering some of your questions. See you later.